Hello and welcome to Blythe Ray Business News. For this edition, I'm joined by Mark Learmonth, who's CFO of Caledonia Mining. Viewers may remember that Caledonia operates the Blanket gold mine in Zimbabwe and has an enviable history of paying quarterly dividends. Caledonia listed in London on the AIM market, on the New York Stock Exchange, and more recently on the Victoria Falls Stock Exchange, on each exchange with the ticker of CMCL. Mark, welcome back on the program. You've just announced your first quarter results. We'll get to the operations in a moment, but let's just start with the financials. Can you walk us through the highlights, please?
Yeah, it was a very strong financial quarter. So revenues up by about 40% as a result of higher production and the higher gold price. EBITDA up from less than 10 million in the comparable quarter to 14.6 million in this quarter, and a very strong increase in operating cash flow from operations, which increased fivefold. Quarter one of 2021 we did 2 million, and that was actually a very disappointing quarter for us. This quarter we did just over 10. So the cash is flowing. On mine costs are now below $700 an ounce, and the all-in sustaining cost came down to about 968. So a very good, robust, strong performance underpinned by, a good operational performance, which I guess we'll talk about now.
Sure. You mentioned there that the all-in sustaining cost has come down. I'm going to assume that's because you're pushing more ore and gold through the mine, so the greater throughput reduces the AISC. But just on costs generally, are you experiencing any inflationary pressure on costs?
Well, actually, before I answer that question, one of the reasons for the lower costs in this quarter was because we, at the end of 2021, we invested more money on more equipment to protect the mine from the vagaries of the Zimbabwe grid, which means that in this quarter one, we've had to use substantially less diesel than previous quarters. So in quarter four of 2021, we used over 1.1 million litres of diesel. In this quarter just finished, we used 86,000. So that is a major contribution to keeping the costs down. But to answer your question, we are not seeing, our costs are broadly split: a third labor, a third consumables, and a third electricity. On labor, we pay our labor in US dollars, and we're not seeing any appreciable inflationary pressure there, because our labor in Zimbabwe is protected. We pay them in dollars, but they're protected by the weakening exchange rate there, so that's fine. Electricity, I've already said that we've managed to cut our electricity costs this quarter, and we intend, having successfully managed to control those costs, we are going to invest some more money over the next 6 months or so, with a view to really clamping down on our use of diesel and optimizing the use of the grid and increasing the solar plant, which comes on stream the end of June. So we don't expect to see any appreciable increase in the electricity cost, notwithstanding the higher diesel. So that really boils down to, yes, we are seeing inflationary increases in consumables, things like cyanide, explosives, drill steels, what have you, along with every other producer, every other commodity. But it only affects about a third of our cost base. And you know what? In an inflationary period, I'd much rather be a gold miner than a brewer of beer. I mean, we're in the right sector to withstand inflation.
Okay, so you're comfortable with where you're on the costs, and also I'm encouraging to hear that you're moving towards a cleaner, greener energy bill. Let's now turn to the actual production at the Blanket mine. Have there been operational production changes in this first quarter?
Yeah, so we commissioned the central shaft end of March 2021, and now that central shaft is fully engaged hoisting waste material, development waste, which means that the other shaft, the number 4 shaft, can now focus exclusively on hoisting ore. And so in the quarter, we actually hoisted a substantially more ore than in previous quarters, at a higher grade with a higher recovery, which supported an increase in gold production, which increased from about 13,000 ounces in the first quarter of 2021 to 18,500 ounces in this quarter. So a very significant increase in gold production. I have to tell you that 18,500 ounces in quarter one doesn't include about 1,500 ounces of gold that's contained in an ore stockpile, which we built up in the course of the quarter. So pending the commissioning of an additional ball mill later in the year, we're hoisting and mining more ore than we can produce. So that will be as we increase the milling capacity, that will flow through later. So very well positioned going forwards. And in April, we produced about 6,800 ounces of gold in April. And if you multiply that by 12, that gives you an annualized run rate of about 81,500 ounces a year, which is some small measure ahead of our guidance for the year of 73 to 80,000 ounces. So production really is coming to the party, and we're very pleased with that.
Okay, I was going to say, I think you said in this morning that the forecast for this calendar year is something like 73,000 ounces. You've also said that the guidance for 2023 is 80,000 ounces. I was going to say, are you on track for that? But it sounds like you may be on track to exceed that.
We're on track. I'm not going to start. We're on track for that, Tim. Nice try. We're on track for that. And if with further exploration and further investment we can increase it further, we'll notify the market in due course. But for the time being, it's the guidance is at 80,000 ounces for 2023 onwards. And
you're on track for that, Mark, are you?
Absolutely. Yeah.
Okay. Well, let's now look at the exploration projects. Tell us where you are with them and explain how they fit in with the strategy.
Okay. Well, I think the project you're referring to is Marley Green, which we acquired in late 2021 for about $4 million. And that contains just under 1 million ounces of gold at a grade of 1.88 grams a ton. And we're busy now reevaluating the existing core samples with a view to increasing that the confidence level from inferred to M&I. And then when we've done that, to move forward as quickly as we can to a feasibility study with a view to defining a potential project which may produce 50, 60,000 ounces a year. So absent any other developments which overtake that property in terms of the pecking order, we would expect probably to start work on that in the next 2 years or so, which will be a nice increase. But don't overlook the scope for exploration on the existing mine footprint. Now that we've got the central shaft down and we can improve our deep level infrastructure, towards the end of the year we plan to resume deep level exploration of Blanket. So we'll do about 15,000 meters of deep level exploration in the second half. Next year we'll do about 25,000 meters. And then also we intend to do more exploration in the shallower areas of the mine, which we think over previous decades have been overlooked. And then in addition, we know that there's exploration prospectivity in the immediate, just off the mine footprint, to the left and the right, or the north and the south. And then in addition, we've never looked at something called the Banded Ironstone Formation, which is a completely separate mineralized zone, which is only about 800 meters to the east of the existing ore body. So plenty of exploration prospectivity on the existing property, in addition to Marley Green. And in addition, we continue to look at other opportunities in Zimbabwe, which is a highly prospective area for gold. So we're cautiously, well, actually, we're quite excited about the prospects to grow this business further in Zimbabwe.
Okay, just in conclusion, I know you've been down in Cape Town this week for the annual Mining Indaba conference. Have you picked up any sort of overarching themes coming out of Indaba?
Yeah, I mean, I'd like to say after the elapse of 2 years that the mining industry has gone vegan and teetotal, but I'm afraid that's not the case. But what we did notice is animal spirits very much seem to have returned, and maybe it's because in the last 2 years or so our business is in a different place to where it was 2 years ago, and therefore we're a more attractive proposition, and people have a more clearly defined view as to where we're going. But we genuinely felt that there was an increased appetite for us and for gold in general. So we came away from Indaba very tired. We were very busy, but very sort of buoyed up by the strength of the reception that we received.
Well, Mark, thanks for that update. Thanks for the feedback on in Derby and what that might mean for the wider mining industry and certainly the gold mining industry, and hopefully what it means for Caledonia. That was Mark Learmonth, CFO of Caledonia Mining. As I said, Caledonia operates the Blanket Gold Mine in Zimbabwe and also has some exciting development projects also in Zimbabwe. That's it from Blythe Ray Business News for this edition. Thanks for watching.